Hello, good day. My name is Hussein and I'm Forex Optimum Broker Financial Analyst. I'm here to bring you all some of the updates in the financial markets that will be allocating your time and also how to position yourself in the current structure or the price action that is developing. Having a look on the fundamental aspects, last week was tough for the bulls as market collapsed on Thursday and Friday. The fall of US index was initiated ahead of non-farm payrolls data. However, the data published were reasonably good and unemployment fell to a single digit figure. Average hourly earnings is also rising as well as the average weekly hours. So we saw an overall positive non-farm payrolls readings, and this helped the bulls to recover some losses at the end of the trading week. We may see that the S&P 500 broad market index partially recouped the correction after testing the level of 3400, which is actually pointing towards the resistance level. So it may continue to rise. The nearest target is somewhere around 3588 points. This week inflation in the United States will be the market focus. However, the reaction to the data will be likely flabby after Federal Reserve Chairman Jerome Powell stated that the inflation is no longer a precise gauge for Fed's monetary policy, and it could spike above 2% with Fed to continue pumping liquidity to the markets. Having a look at Brent crude prices, which slid to the level of 42.37 per barrel last week. Crude prices are still pressured by weak demand and strengthening the US dollar that gained in value after positive non-farm payrolls data. Oil rigs numbers is rising in the United States, which it rose to 181 units after 3 weeks of declining. If the US oil producers gain momentum in crude production, this may mitigate OPEC efforts to re-establish balance on the global oil market. Traders are looking at the $41.38 per barrel resistance level. If it would be broken down, crude prices may drop much further. Gold prices continue to consolidate within broad sideways movements, and there is no clear reason for gold to break out of this broad range. On the other hand, the global economy continue to recover, and this lowers the demand for gold as a safe haven asset. Definitely, when the demand of the gold will be going down, that means a lot of I would say that investors are feeling kind of confidence to move their money into other securities and also markets like stocks or currencies. On the other hand, there are no new relief programs on the horizon. The US Senate is still far from reaching the agreement over $1+ trillion relief package. This factor, together with strengthening greenback, curbs gold from any significant upward movement. So we may expect gold prices to muddle between the level of 1863 to the level of 2016 range dollars. US Treasuries yield soared last week on the non-farm payroll data, but could retrade to 0.6% this week, as we saw in the last week of August. There are no mature reasons for the yield to rise further. That's all for the day. Wish you all a great trading week and best of luck.